My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Friends, I just want to make some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC. Or tweet me at Jim Cramer. Most stocks simply cannot withstand the gravitational pull of this incredibly bearish bond market. The sudden increase in interest rates all over the place, the long end, the short, and the middle, has created havoc among multiple fronts. It's like a giant grim reaper that cuts down sector after sector. And that's how you get days like today, which at one point was so ugly, but then rebounded at the close. Dow still finished off 74 points, but the S&P edged up 0.01%, and then NASDAQ held up all day, finishing very strong. I want you to keep that in mind, +7. You know, I got to tell you something. We're going to have to spend some time on the NASDAQ because it was truly incredible. But the damage, before we get that, it can be extreme. Let's take a look at a calm stock, a stock that I've had on many times, American Electric Power, AEP, the Sterling Columbus, Ohio utility, one of our greatest, terrific management, lower than expected power costs, great location. And what happened? I'll tell you what happens. AEP turned out to be just simply piggybacking off the bond market. Now it's got a double whammy. The company's always financing and always paying out generous amounts of cash to you, the shareholders, always meeting new air quality demands. But with the collapse of the bond market, a fine company like AEP has seen its stock completely obliterated.
The house of pain.
Like all the other utilities, you can't escape the grim reaper of higher bond yields. Today, the grim reaper spoiled the breakup of Kellogg. Oh, could have been such a big day. Into WK Kellogg, the sleepy North American cereal company, and Kellanova for snacks, Cheez-Its, Pringles. Normally, one of these would be attractive to somebody, but they're now taking it on the chin from the bond market at the same time that retailers like Costco are fighting back hard to bring down packaged foods. Every day they try to get those prices down, and it's starting to work. Now, we have to ask ourselves, before we get too negative, is anyone immune to the bond market rebound? Well, not really. No company can be immune because it is the stock market. Oh, hold on just a second. Everything except gold and to a lesser extent crypto, they're all priced off for treasuries in some way, shape, or form. If you can get 5% risk-free, that's the bond market telling us that we're simply not doing enough to beat inflation. We know that inflation erodes the value of anything that's paper. And after that red-hot purchasing managers number this morning, it's clear that erosion's happening a little faster than we thought because there's still too much buoyancy in this economy, even after all these rate hikes. Oh, so many companies and individuals refinance at artificially low rates. Well, you know what? That was terrific. But there's just too much money in the coffers. Too many people hanging on. Even if the customers need financing, think autos, or the landlord needs rent, or the utility needs capital for the endless capital program. Hey, who doesn't need capital, right? There are very few companies with the kinds of balance sheets and the kinds of demands for products that allow them to escape from being hostage to the bond market. Food companies, they certainly can't do it. Machinery companies can't do it. That whole industry is fueled by borrowing. The retailers, please. They're already busy trying to get financing for the holidays. Healthcare, drug stocks are in trouble because they generally pay big dividends. And they're now losing those dividend investors to the bond market competition, which is risk-free. Meanwhile, the medical technology makers, they're relying on financing. Otherwise, no hospital would be able to afford those machines. So what's left? Well, how about the biggest and the best? Yep, only the mega capitalization stocks that can defy. They can defy it. They can defy it, which is pretty much exactly what we saw today. No wonder the NASDAQ did just fine, even when the Dow rolled over. It's the companies that are so flush. You know, I call them nation states for that reason, a.k.a. the Magnificent Seven. It's Apple, it's Amazon, it's Alphabet, it's Meta, it's NVIDIA, it's Microsoft, and it's Tesla. These are companies, with the possible exception of Tesla, at some point in its own car cycle, that only need their own money, and boy, do they ever have it. They are actually coining a fortune with their considerable cash hoards. That's right. They're making money on their deposits. It's funny. We used to look at their gigantic cash positions and their cash management attempts to try to bring in a little extra income. It's just a kind of waste of time and abstraction. Now they're huge winners, and I think you'll begin to see a line item in their quarters, the money they make off their cash, that could finally offset some of their miserable losses from that darn strong dollar.
By the way, it's a little unfair that the dollar's still strong given how much our financing our government needs, but then again, the rest of the world's not exactly covering itself in glory either. Think about it. Think about who in the modern age has an indispensable product. How about 7-Up? I got them. Take the case of Cramer stalwart NVIDIA. Sure, almost every member of the Magnificent Seven wishes they didn't have to go hat in hand to NVIDIA for its incredible cards. Those are like chips. But they buy them. They pay a lot of money for them, even as they claim they're working on something competitive to NVIDIA. Imagine if AMD doesn't have anything that's competitive to NVIDIA AI chips right now, how can anybody else? Even Elon Musk had to tip his hat to NVIDIA's indispensability. You want artificial intelligence? NVIDIA is artificial intelligence. You think it isn't indispensable? Sure, until your competitors have it, then suddenly you need it very badly. If you're Amazon, can you imagine the power you need to learn how to use technology that stores the data and then how much speed you need to allow your AI to think and analyze the entire web? What can our little minds do? Our teeny little minds? Last week, we featured a company called Confluent, which is a software that allows this company like Walmart to calculate in seconds the impact of getting a pair of 3430 chinos, don't worry, I'm getting mine taken into 32, to a customer anywhere, including where there will be enough pants left over for everybody else. With that tech, Walmart can crush everyone, maybe except Amazon, all thanks to Confluent's software bolted to NVIDIA's hardware. Everybody else needs this stuff, too, if they want to stay competitive. What else? How about for years, Microsoft and Alphabet hoarded cash like there was no tomorrow. Same with Meta and Apple. They were simply masters of cash, as if they almost thought that this day would come. Like they had a vision. I always felt badly for Luca Maestri, the brilliant CFO of Apple, as he frantically tried to make a little money with Apple's cash hoard. Now I can't wait to see how much Apple makes on its cash with much higher rates. I know it's not something they want to. They make technology, but now they're making money on their money, and they should be proud of how they financed at ridiculously low rates and had a lot of cash on the sidelines once rates went higher. The banks seem pathetic versus Cupertino. First National Bank of Cupertino is much better than First National Bank of. No, better than JP Morgan. Meta can't spend its money fast enough, even as Mark Zuckerberg certainly seemed to be trying. But now he's pronounced it the year of efficiency, and he stopped the year of living recklessly. Well done, Mark. Now, before you say that in the end it doesn't matter, even the Magnificent Seven will get hit by bonds, I want to tell you that Goldman's David Kostin, smart fella, penned in a brilliant note this weekend. These stocks were the ones that had been hardest hit initially by the huge swings in bonds that brought us these insanely high yields. The mega cap techs are closer to being de-risked than any other segment of the market because they already went down so much. All they need is a break in the velocity of this decline, perhaps because oil stops its historic run. It sure reversed hard today, beginning of the reprieve at long last, or perhaps because we've gotten so oversold that we have to bounce as we have at this level all year. Or maybe, just maybe, the mega caps have gone from being pariahs because of worries about inflation and long-term value to being the kings of the realm. The ones you can buy on the way down, knowing that at some point, perhaps where the 20-year crosses the Fed funds rate and yield, bonds will calm down. At that point, these companies will be recognized for their solvency, even as our country deserves to have its credit rate downgraded. Their solvency and their indispensability, which is unparalleled, make our government's bond market, make our borrowing capacity seem ridiculous. Bottom line. We're in an unusual situation, but skyrocketing bond yields are bad news for the vast bulk of the market. The mega cap techs are the big exception. You want to make it through this difficult moment? Once again, you know what you need? You need the Magnificent Seven, and then there's all the rest. Jerry in Missouri, Jerry. Go ahead, Jerry, I'm ready for you.
Hello.
How about maybe we take Joseph? Jerry?
Hey, Jim, how you doing?
Man, couldn't be better. How about you? We had a big win yesterday. Hey, I worked on the jury duty today. I actually liked it. I tell you, I like serving. I like being a citizen. It's a dynamite thing. If anybody gets called for jury duty and you try to duck it, come see me. I'll tell you you're wrong. Go ahead. Wrong.
Jim, there is a travel boom going on, yet it seems that many of these stocks are being beaten down. One such stock is at its all-time low since coming out of bankruptcy. What is going on with Hertz?
All right, that's a really good question because they got Steve Scherz running it, and he was the dynamite CFO over at Goldman. I think the stock's dirt cheap. I've been wrong because I'm a believer in and I'm a believer in the fleet, but I'll tell you what I think's happening. People are starting to think that got too expensive. That's the big rap. It's too expensive to rent a car, and that's what's going on. They got to lower prices. They don't want to hear that. I just told them. Joseph in Florida. Joseph.
Hey, Jim. Booyah.
Booyah, Joseph. What's happening?
Go Eagles, man. What a great week to watch the Eagles this week.
Someone was complaining. They were complaining, say, oh, well, it's really ugly. You know what? I want another. If we win it 17 ugly times and then we win the ugly in the Super Bowl, you know what we've done? We've won. All right.
I agree. Exactly. I totally agree with you. They played excellent. I wanted to ask you a very important question here.
Sure.
With the current environment of automotive unions and their direction for employee compensation and benefits, how long can we expect Tesla to be able to pay its workers so much less than UAW, and will that affect profits long term?
Okay, I'm going to give you my rap on this, all right? And I come from being a guy who helped lead a Wildcat strike, was a member of the union for many years. The union's overplayed its hand. America wants cars, okay? And they want inexpensive cars. And Tesla's going to be able to provide that. That's what America wants. It's not standing in line with the protesters. It's standing in line with people who can make cars. That's all we care about in this country. We want a fair deal for the people. All right, skyrocketing bond yields are bad news for the vast bulk of the market. But the one big exception right now are the mega cap techs. You betcha. Oh, man, tonight, hindsight is 2020. So at the start of each quarter, I like to look back on where we're coming from to help maybe get a better sense of where we're going. So tonight, I'm breaking down the top Dow 5 stocks, set you up for what's to come. Then a real battle is brewing with analysts on tractor supply. I'm taking a close look at the bull case and the bear case and see where I come down. And October is Breast Cancer Awareness Month. So in honor of this special month, we always do this on Mad Money. We always focus on what really matters. We're checking in with women's health company Hologic to hear what lies ahead and what we all can do for awareness. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.